Right, welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and with their market commentator Darren Sinden. How are you on this practically dark midday, isn't it? Really?
Yeah, it was just started to pour with rain, Zach, so maybe that's an omen about what we can expect from the rest of the session.
But we seem to be rather more stable than we were at the start of the week. This looks like a party compared to what we had before.
Yes, it does, although as we'll see a bit later on in today's show, there are still some causes for concern. But certainly as far as Europe's concerned, the moves appear to have moderated for now. And there are, one can start making some sensible recommendations and and looking at things, in a more practical way rather than just, through the glasses or goggles of fear and greed, if I can even say that.
Right, fear and greed. Let's see if there's any fear and greed on the first slide here.
Okay, so not much data today in Europe, but we'll just sort of flag the situation that we inherited from China first thing this morning. So Chinese equities finished lower, down by a quite pedestrian 1.28%. But I think the thing to point out here is that the range that the session underwent was 8% intraday. So still
all over the place.
A lot of volatility there, even if the final figures might not suggest as much. As we said, somewhat calmer in Europe. European equities down by around 0.9% if we look at the Stock 600 as a broad measure of how Europe's performing, though it was down about 1.5% mid-morning. It's rallied slightly. And the only data really of any consequence today in Europe, here in the UK, the British Bankers Association mortgage approvals number for July. No surprises here. 46,000 mortgages approved in July. That was exactly what was forecast, and that was slightly ahead of June's figure of 44.8 thousand. So steady as we go with mortgages. I suppose that's what you'd expect over the quiet summer month, to be honest.
Okay, all right. On the next slide, we've got a company which I was thinking would be a good proxy to the China meltdown, if there is one, Burberry, where much of their business is done in that emerging economy.
Absolutely. They're down about 1.65% today. This is ticker BRBYLN for those in London, £13.69. As you say, it's all about China for Burberry. More than a third of their revenues come from the Asia-Pacific region, and a big chunk of that would be China. So down 1.65%. Again, they were lower earlier. I think I'm right in saying they were down by a smidge over 3% first thing, where they rallied slightly, but of course they've fallen from around £15.60 at the beginning of the week. And then another UK-based stock, but one that's got a global presence, WPP, one of the world's biggest advertising agencies, £13.38, down 1.76%. Again, they had been lower this morning. They had numbers today. Excuse me, profits rose 44% to some £710 million, and revenues were up by about 6.8% to 5.8 billion for the first half of 2015. So some good numbers on the face of it, but the devil is always in the detail in these things. And Martin Sorrell, who's the CEO, very respected for his views on the industry and the wider global economy, he said that optimism in the advertising industry seems misplaced, and so. As I say, the stock's cooled down, and if Martin Sorrell's a bit concerned about advertising revenues, maybe we should be too.
Well, he likes to be a little bit on the pessimistic side, which is good in terms of actually ensuring that people don't get over carried away with the rating of WPP. But
absolutely,
there we are. Caution there. Right, on to the movers and shakers.
Okay, so M&A rumours and movers, and today we've got some news from the oil services industry. Schlumberger of the US, ticker SLB, trading around $72.52, to merge with a competitor, Cameron International Corporation, that's ticker CAM in the US. They're trading around $47.96, pre-market up around 12.9%. This deal's worth around $14.8 billion all told. Interestingly, the deal's been approved by the boards of both companies in a unanimous fashion, and the reason for the merger is quite straightforward. They're getting together to look to reduce costs and improve competitiveness against the background of
huddling together.
Yeah, falling oil prices, yeah. Well, yes, it is, and one that, they can't predict how long it's going to last either. As far as Cameron shareholders are concerned, they're going to get around 0.716 of a Schlumberger share and $14.44 of cash for each of their Cameron shares. That will value Cameron at around $66.36, and that's a 37% premium to Cameron's 20-day volume-weighted average price. So, a decent premium there for the Cameron shareholders. In terms of what the merged group's looking to achieve, Well, cost savings somewhere of the order of $300 to $600 million in year one. They will achieve that through streamlining their supply chains, manufacturing processes, and I'll assume their headcount. The merged group, if it goes ahead, would have revenues of around $59 billion based on 2014 figures. So it's a substantial group as when and if this deal is actually concluded.
Okay, well, let's move along to the US data points.
Okay, again, a bit thin on the calendar as far as US data is concerned. The one main point of note in the data is the durable goods orders for July. We focus on the new orders number, but there is an ex-transportation element to this as well. But for new orders, the forecast is minus 0.4%. That contrasts quite sharply with June's gains of plus 3.4%. But I'm told that it's a drop-off in aircraft orders that's seen as depressing the new orders number for July. But if you look at the ex-transportation area, is actually likely to be a small positive. And then the other main point in the States this afternoon, another speech from a Fed governor, this time the New York Fed President Robert Dudley. Is going to speak on the regional New York economy at 10 a.m. Eastern time in the States. That's 3 o'clock London time if anyone wants to be watching what he's saying then.
Okay, well, let's push along to the US pre-market movers and levels.
Okay, we'll come back to the oil services sector and look at Transocean Limited. That's RIG, R-I-G in the US. $12.10, down 0.8%. Not much of a move at the moment, and I suspect that the reason that they're only down 0.8% is the merger news between Schlumberger and Cameron. Nonetheless, there was news late last night, and the company is to take a further 2 billion Swiss francs in charges. Remember, this is a Swiss company listed in the States, and ask shareholders to vote to stop the remaining dividends in 2015. I think it's interesting to note that they were down as much as 7.5% pre-market. Remember, of course, Transocean was wrapped up in the BP oil rig disaster in the Gulf of Mexico several years ago, and they're still sort of trying to break through the legacy of that, I think. And then moving into the software sector, Solara Holdings, SLH is the ticker in the US, around $45 pre-market, up 7.89%. And earnings and revenue beat from this risk management software group. They posted earnings of 81 cents versus expectation of 80 cents and $297.1 million worth of revenue against market expectations of just 288.9 million. So they've done much better than expected, certainly on the revenues front, and the market's rewarding them accordingly. And then if we move to levels in indices today, cash indices today, no real change in our first two. We haven't, despite the wide ranges in both the FTSE and the DAX, we haven't moved the levels. So 6,000 still remains our downside level to watch. Although we have drifted briefly below that, we haven't closed below it, and that's why it's still in there. And 61.51 is our FTSE upside level. We look to see that tested if we are going to rebound any further. The DAX 9,760 remains the downside level to watch, and 10,125 to the upside. Apologies for the wide range, but the volatility,
it's all over the place,
doesn't really give us much of an option. In the US, 1865 is our downside level in the S&P, and 1926 our upside level. Again, a wide range, but once again, the price action and the volatility, means that we've got to pick wide ranges. And for the Dow, 15,666 on the downside. That's just a fraction below last night's close, and 15,860 would be the number it would need to take out and stay above to make new gains. On the currency front, the dollar seems to be clawing back a little bit of ground against the euro. So 114.15 now is our downside level to watch in euro dollar. Plays 114.98 to the upside. Aussie dollar, US dollar, again a little easier. 71.04 now our downside level in the Aussie. Plays 71.54 to the upside. In dollar yen, we look for 118.70 the downside level, plays 119.96 to the upside. Obviously, the bulls will be hoping to get that back above 120. And cable, we thought it might test above 158 yesterday. If you recall, we had 158.05 in.
It's totally flipped the other way, really.
Yeah, but it did actually break through that 158.05 level, spiked slightly higher, and then has sold off and not managed to rally. So 156.04 to the downside, plays 156.80 to the upside. So changing the big figure there again in cable.
All right, so what's in focus today?
Well, I just wanted to look at the Dow Jones, the Dow Jones Industrials, or Dow 30, whichever you'd like to call it, and the price performance that we've seen from that index over the last couple of days. And my thoughts are this, that despite some sharp intraday rallies, the Dow has been unable to hang on to gains over the last 4 sessions. And Monday's lows of 15,370.3 are just 296 points away. Given that we had a 660 point range yesterday and a 1,089 point range on Monday, it seems plausible that this low would be tested again in the near future. And then that low, if broken, would likely be followed by a test of 15,340, which was the low back in February 14. Although it must be said, that is a level from where the market rallied strongly. But I'm not suggesting that that would necessarily happen this time. But I think it'd be important to watch the price action. What concerns me is the fact that, you know, in the last couple of sessions, we've moved higher, but we've been unable to hang on to the gains, and we closed, you know, back towards the lows.
I suppose yesterday we'll have to say, yesterday maybe, or the aftermath of yesterday would be the acid test, in the sense that there was that late sell-off.
There was, and
we have to see now whether that was a real, you know, that was the true direction, or that's just the final flush out on a higher
possibly.
low. So
I mean, the markets are called up in the States by 1 and 1.5%. But as you say, will they, if they do make a gain, will they have the legs to hold on to it? And my concern is
this vertical drop is not. It doesn't exactly inspire confidence.
It doesn't. No.
Okay, well, Darren Sinden, market commentator, Admiral Markets, thanks for coming in and going through the Wall Street crossover show. We'll be back at the same time, 1 p.m. tomorrow.